The Internal Revenue Code is easily the most important of all the different types of tax authority out there. Ask any practitioner. They'll tell you if you have a tax question, the first place you should always go is the Internal Revenue Code. In the U.S. legal system, we know the U.S. Constitution trumps all other legal authority. It's the law of the land. So those are just two different types of legislative sources in the tax law. There's also tax treaties. There's also legislative history. So this video is going to continue talking about some of the issues with the Internal Revenue Code, the Constitution, tax treaties, legislative history, and looking at all those different things. I have some questions, some discussion problems, and some analysis that I think will really help you. All right, let's go ahead and jump into it. So we have 25 questions on legislative sources. We're going to start off by looking at the highest law of the land, the Constitution. So question 1, discuss the powers of taxation that are granted to Congress by the U.S. Constitution. So the Constitution, as I mentioned, is the highest law of the land. It's at the top. And the Constitution expressly provides that Congress may not impose export taxes, but may impose import taxes. Now, when I'm talking about the Constitution, I'm talking about not considering any of the amendments. So not looking at any of the amendments, specifically the 16th Amendment, just looking at the Constitution the way it was drafted originally by the founders back in the late 1700s. So again, the Constitution expressly provides that Congress may not impose export taxes, but may impose import taxes. In addition, the constitutional rights of due process and privacy of the citizen apply in tax as well as non-tax environments. And in my other video dealing with constitution and legislative sources and tax research, I talked about these items and how we look the Constitution. It affects, of course, all different areas of U.S. law. That's why it's at the very top of all U.S. law. It's the U.S. Constitution. It's the highest law of the land. Now, looking specifically at tax, and again, we're considering this not looking at the amendments. We'll look at questions that deal with the amendments later on. But again, without considering any amendments, the Constitution also requires that taxes, so that specifically in the Constitution, taxes imposed by Congress be uniform. They have to be uniform from state to state. So direct and per capita taxes are prohibited unless the revenues generated are apportioned to the population of the states from which they were collected. So specifically, they have to be uniform. Okay, taxes have to be uniform across the board. Unless, so basically it's saying an indirect tax. So indirect tax is allowed. If it's going to be a direct tax, which specifically means like per head or per person or on property owners, so direct or per capita taxes are prohibited unless they are generated. Sorry, the revenues are generated are apportioned. So it has to be apportioned to the population of the states into which they're collected. So it has to be apportioned among the population of the state specifically. So that's very, very important to consider because we're going to talk about the 16th Amendment in a moment because the income taxation. The income tax, you're going to see it's going to be held to be unconstitutional because it's a direct tax and it's not going to be apportioned among the states specifically, the population of the states. So we're going to look at that, okay? We're going to look at that issue. And again, by the way, in my previous video on constitution and legislative sources, I go in depth. I have an example with Georgia versus Philadelphia versus Pennsylvania, thinking about, the history of back in the founding of the U.S. and the Constitution when it was written, and talking about those things. So make sure you listen to that. But let's go on. All right, question 2: discuss the events leading to the passage of the 16th Amendment to the U.S. Constitution. So we just talked about the Constitution, how it's the highest law of the land. Now we're going to bring into play the amendments that relate to tax. So the 16th Amendment relates specifically to tax and it amends the Constitution. Now, the 16th Amendment was it was ratified, which is what matters, because if you remember back to your U.S. constitutional law or government class, or for those of you that aren't maybe U.S. citizens and maybe you don't know about this, but 3/4 of the states have to ratify these amendments to the Constitution. So that's actually quite a bit. It's quite a hurdle to jump. And that took place on February 3rd, 1913. If you think, okay, our Constitution was written in the late 1780s, okay, and then all the way to 1913, it's a long time with no income tax. And if you look at our U.S. history, the first income tax came about in the 1860s during the U.S. Civil War. The U.S. Civil War. Now, before that time, before 1860, there was no income taxation or no income tax in the U.S. It was the revenue was raised through tariffs. So again, for those of you that know a little bit about history, we have this issue, the struggle between the North and the South, and I talk about this again in my video dealing with the Constitution and legislative tax research sources. So if you're a history lover, make sure you watch that. But basically, one of the reasons why we have a civil war in the United States is that the South, they're basically exporting all these different items, these crops and tobacco, cotton, all these different things. They're exporting these items, and also you got to worry about the imports and all these different ways that taxes were taking place, or revenue raising, I should say, not taxes. Revenue raising was taking place, these tariffs. So it wasn't a tax, it was a tariff. Okay, we talked earlier about export taxes, tariffs. We're talking about tariffs now. So most revenue is raised through tariffs. And again, if you want more about the struggles I talked about with the South and the North, again, watch my video. But our first income tax is in the 1860s, and that's in the U.S. Civil War to raise revenue for the war. So there was a case taken up by the U.S. Supreme Court in the 1870s to consider whether the income tax was considered constitutional. Now, here's the issue, is that tax actually expired in 1872. It expired then. So when the case was being heard by the U.S. Supreme Court, they said, you know what? It's past 1872. That's when the U.S. Supreme Court took up the case. It's past 1872, so we're going to consider this a moot issue because guess what? There's no income tax anymore in the U.S., so we're actually not going to rule on this. All right, that's all fine. So, yes, we had this tax. It might have been viewed as unconstitutional, but the Supreme Court didn't rule because, again, it's moot because at the time they ruled, the tax expired in 1872. So, now 1894 comes around. Now we have a tax dealing with property, okay? Dealing with property. And that tax was viewed as a direct tax. And in a case, Pollock versus Farmers Loan and Trust Company, which again I talk about in my other video, the Supreme Court, U.S. Supreme Court held that the income tax or the direct tax, so it was based on income, it's based on the income on property, was viewed as unconstitutional. And they looked at the language of the Constitution and they said, hey, this is a direct tax. And remember, direct taxes, for them to be allowed, have to be apportioned among the people in the states. And guess what? They were not. So therefore, it was viewed as unconstitutional and it was thrown out. The tax was viewed as unconstitutional. So the Supreme Court came in and they said, look, this is viewed as unconstitutional. If anyone tries to bring about an income tax, it's going to be viewed as unconstitutional. Okay, so then 1909 comes around and there's a proposed amendment. The 16th Amendment is proposed, and again, it's actually ratified on February 3rd, 1913. And the 16th Amendment, specifically what it says, and let me read this, and you might want to take note of this, or you can just look it up. Either one, you can stop the video, look it up. The Congress shall have the power to lay and collect taxes on incomes from whatever source derived, without apportionment among the several states. So, boom, that apportionment factor is no longer required. And without regard to any census or enumeration. Very important. Basically, the 16th Amendment, it gives even broader power to Congress to levy tax. So now the direct tax is viewed as constitutional because it does not have to be apportioned. We have to take into account census, any of those things. So it is constitutional. And then that brings about in 1913, we have our first, or I shouldn't say first, our continuous U.S. income tax. Our first one was during the Civil War, but now we have our continuous income tax. And with that, let's move on to the next question. All right, we've been talking about the Constitution. Now we're going to move on to the legislative process. So question 3, summarize the usual steps of the legislative process for the development of federal tax legislation. So tax legislation, it originates in the House of Representatives. So we're looking at Congress here. And remember that Congress is broken into the House of Representatives, and the Senate. So we're talking about the legislative passing of a tax bill, which remember, Congress, and the 16th Amendment says that Congress is the one that levies taxes. So it must originate in the House. And usually it's going to occur through the House Ways and Means Committee. Now there's many committees in the House and Senate. The House Ways and Means Committee is specifically in the House of Representatives, deals with budgeting and all that stuff, and of course raising revenue. And usually it starts there. The approved bill. So within the House Ways and Means Committee, it's voted on by the members. And if it passes a simple majority, then it gets proposed at the House, and then they vote. Now, the approved bill is then voted on by the full House of Representatives, and then if that bill is passed, it's sent to the Senate Finance Committee, which then they are going to mark up their version, which could be significantly different. We'll talk about that in a moment. Senate Finance Committee, so it goes from House, Ways and Means, then a House votes on it. Then from there, on the side over here, we have the Senate. At the Senate Finance Committee, they get it, but again, they can mark up and change. Then if they do a simple majority vote and they agree, okay, we're going to pass this on to the Senate, then it goes to the Senate for vote. If they agree on it, okay, then we have two versions of the bill usually. That usually is what happens. Sometimes it's the same. If it's the same, then it goes to, and it's been passed by the required supermajority or whatever is needed, then it's good. It goes to the president. But usually if it's different, then we have what's called the Joint Conference Committee. And the Joint Conference Committee, it puts together the bill. So it's made up of members of the House and Senate, puts together this bill. They then create a bill. They kind of reconcile differences, and it goes through the process again. The House and Senate, they have to vote, and they have to go through that process. Finally, if it goes to the House and Senate, and it passes that, then it goes to the president. President has three different options, has 10 days to decide, can sign it, goes into law then, or can veto it. If it's vetoed, then it can be passed by a certain vote, depending on whether reconciliation or reconciliation is whether it's used or not used, depends on the change. That's why I'm not giving the percentages. If you want to know more about the percentages needed to pass, again, watch my previous video that covers legislation and constitution and tax research. I talk about that. Or president can do nothing and do a pocket veto, which has to do with if he or she knows that it's going to be the Congress is their session's gonna end soon. Okay, so that's really the legislative process in terms of the legislator. Again, tax law also comes from the administrative executive branch from the IRS and Department of Treasury, and you'll learn about that in another video, as well as the judicial branch. So tax law is not just in legislative, but that is the legislative process. All right, question 4. What is a public law number? In PL 115-97, what do the 115 and the 97 indicate? Okay, so a public law number, which PL 115-97 is an example of, is the standard format that we use when we cite a bill. It doesn't have to be tax, can be anything in the legislature, okay? We refer to that. And specifically, PL 115-97 is the Tax Cuts and Jobs Act of 2017, and you might be watching this, way in the future. I like to use that as an example because it happened a few years ago from the time of this video, and it has some great examples to use and to help you understand things. So that's actually what that is. And the PL means public law, of course, public law. The 115, what does the 115 mean? The 115 is the session of Congress. So that is the session of Congress that is actually there. And then the 97 is the 97th bill that session of Congress adopted. So session of Congress is the 115. And then again, the 97 is the 97th bill during that session of Congress. All right, number 5. As a bill proceeds through Congress, various committee reports are generated. List the 3 committee reports that typically are prepared for a new tax law. Okay, so now we're moving from the legislative process to looking at authorities dealing with congressional intent. So there are 3 committee reports that are typically prepared for a new tax law. They are the committee report from the Ways and Means Committee, also committee report from the Senate Finance Committee, and then also from the Joint Conference Committee. So these committee reports, you can have a committee report from any of these three, and usually you do on major bills, okay? And these committee reports are very important when you're looking at legislative history and intent. And we'll talk about how a researcher can use this in a later question. But remember that some of these, and go back to my previous video if you're having trouble remembering, but some of these they are written contemporaneously at the same time as when this is all being discussed by the different legislators, right? Remember the Joint Committee on Taxation, Blue Book, that one is not contemporaneous. It's written after. So the JCT Blue Book, that one is after. And if you recall, that one specifically is very important because some courts have looked at that very favorably, but others have not because it's not contemporaneous. But for tax practitioners, the Blue Book is a Blue Book by its nature means, okay, a blue book, a helpful book. And there's blue books in everything. There's blue books in citation. There's blue books in different areas of industries. Well, the Blue Book in Taxation is a Joint Committee's book, okay? So again, different conference committee reports, contemporaneous, and that makes a big difference. That also goes to the weight. Again, I went through that in my previous video, and you're welcome to look at that. But those are the three different committee reports. Okay, number 6. When are committee reports useful to a tax researcher? So committee reports are an important tool for tax researchers in situations where the tax law is unclear, which that happens a lot, or when recent legislation has occurred. So remember, I use the Tax Cuts and Jobs Act of 2017 a lot because, again, that happened a few years ago and it was a big deal. There was a lot of stuff going on. There's just a lot of good examples, as I mentioned. And that's one, the Tax Cuts and Jobs Act of 2017, the Blue Book was used a lot by practitioners because there was just a lot of new provisions. For example, Section 199A, where there's nothing else in the tax law. So we needed as much help as we could get. There was a lot of issues we needed clarity, so it was unclear. And again, it was recent legislation, so it's helpful to get an idea. The committee reports generally explain the elements of the proposed changes to the tax law and the reasons for the proposals. So it looks back. Now, if you ever get a chance to go through the legislative process, and again, I think the Tax Cuts and Jobs Act of 2017 might be if you go and look online, maybe an encyclopedia online, and look at like the process, it's real interesting because you're going to see that, okay, you have the House bill, then, a few months later, the Senate bill comes out. It's a lot different. There's major differences. This deduction, okay, they both have the same deduction, but they're computed completely different. There's obviously different constituents involved, horse trading, everything in the political process, the sausage making process, it's all going on. So it's very interesting to see, okay, we have this bill here, then we have this bill, and then we have the final product and how that all works. So using these congressional intent items really does help because you might see, oh, why did that item leave? Oh, maybe the lobbying industry for the real estate industry was active. Something like that. Maybe there was someone from the real estate industry that was an expert witness during this process. So it really does help look at that. The committee reports can provide insight concerning the meaning of a specific phrase of a statute or the intention of Congress concerning a certain provision of the law. So again, it gets at this clarity if it's unclear, and also a recent issue if, again, there's lots of open questions out there. Okay, let's move on to question 7. In addition to committee reports, what other reports related to legislative history may be of value to the tax researcher when analyzing a new provision of the tax law? So we talked about the committee reports. We talked about the usefulness of them. Now it's just asking, are there any other types of authority out there dealing with legislative history? And there are. Floor debate reports. So floor debate reports are not the same thing, but the committee reports, they might involve some of the things said during the floor debates. But this is actually, kind of think of it like the stenographer, actually quoting what's being said by the different congressional, the House representatives to the representative or the senator, what's being said. And it's not as, the weight of the authority isn't as good as the committee reports, because it's not, the official what's being released by those committees, but it still has some value. It still is considered something that can be used and relied upon, but it's not binding. Okay, it's on that list. Again, look at my video. So the floor debate report may also be useful to the tax researcher in that the report includes a summary of the floor discussion concerning the proposed bill. Where additional detailed information regarding the development of a provision is needed, the floor debate report may be of value. So if there's some specific phrase, again, you need clarity, a recent issue, or maybe you're looking to a certain industry that might be lobbying, you can go in here and look at this, see what different senators, different representatives, what they said about the bill and, what was proposed. So very, very interesting. In the floor debate report, it can be valuable. Okay, let's move on to tax treaties. So what is a tax treaty? Tax treaties are agreements negotiated between countries, between the U.S. So specifically, what is a U.S. tax treaty? It's with U.S. and another country, okay? And it concerns the treatment of individuals and companies subject to the tax laws of multiple countries. So one thing you might remember from my previous video, we want to make sure we avoid double taxation. We don't want the U.S. and another country to tax someone both, at the same time. That gets into issues of, okay, which country has the right to tax? So treaties help alleviate that. Now, the U.S. does not have treaties of every country out there, and a taxpayer may still have to pay tax twice in certain jurisdictions. There's other things out there that help alleviate that, but they're not perfect, like things like the foreign tax credit or certain deductions. Okay, so U.S. another country of a treaty, and again, the primary purpose is to eliminate double taxation. We want to eliminate that. We want to make sure that this taxpayer is not going to be paying tax twice on the same grouping of income. And I talk more about this again in the video. Any tax matter that may be covered in a tax treaty, it can be, anything. It can be individual, personal taxation. It can be corporate taxation, partnership tax. You can think about it. It's there. Estate and gift taxation, withholding, multinational corporate taxation. These are different examples, okay? Okay, question 9. Describe the ratification process for a tax treaty between the United States and another country. So for this one, we're going to go to the Constitution. Again, highest law of the land, right? So we go to the Constitution. And specifically, if you want to take a second, you can stop the video and look at the Constitution. If you go to Article 2, Section 2. Article 2, Section 2, it specifically says that the president creates treaties with other countries after receiving the advice and consent of Senate. So the president is a big player here when it comes to treaties and on advice and consent of the Senate. Okay, so again, the president is the big player, but advice and consent of Senate. So the Senate is involved as well. Okay, question 10. Now we're kind of getting into the Internal Revenue Code, but we're still in treaty land. When an Internal Revenue Code, which you're going to see IRC referred throughout the rest of the question, so keep that in mind. IRC means the code, the Internal Revenue Code. When an Internal Revenue Code section and a tax treaty provision appear to conflict, which usually prevails? Okay, so again, I keep referring back to my video. So I have that video, right? The Constitution and legislative source video and tax research. If you didn't watch that, please make sure you watch that. But in that video, I talk about the weight of authorities. On a scale of 1 to 10, 1 being highest, 10 being lowest, of what can be relied on in terms of the substantial understatement penalty, 1 through 5 being binding on a taxpayer if it actually applies to the taxpayer, 6 through 10 being persuasive. The U.S. Constitution is a 1. The Internal Revenue Code, which is by far the most important of all the different types of tax authorities, not the most strongest, that's the Constitution, but the most important, where we always start, that's a 2. A tax treaty is also legislation, it's also statutory based, that is also a 2. So we have this issue. We have 2 items that are a 2, and the question is saying, okay, if you have 2 authorities that have equal weight based on this system, right, and they appear to apply to the taxpayer, but they provide different results, they conflict. Which one do we use? So the general rule, and you definitely want to write this down, the general rule, and like in tax, there's always exceptions, but the general rule is that a tax treaty provision and an Internal Revenue Code provision, if they're in conflict, the provision adopted later, So whichever one was adopted later in time will prevail. Now, again, there are exceptions where this might not be the case, but really the general rule is whichever one is adopted later. All right, now we're getting to the fun stuff. Yeah. So now we're getting into the Internal Revenue Code. And for the rest of the questions, we're going to focus on the Internal Revenue Code because, as many of you know, and you've already heard me say many, many times, ask any tax practitioner, the Internal Revenue Code is the most important of all the different types of tax authority. It's where you always start in the tax research process. It's that starting point. And we're going to see at the very end of these questions, it's not the only thing you look at. It's by far not the only thing, okay? It's that starting point, but it's not also where you finish, okay? It's the starting point. So discuss the evolution of the Internal Revenue Code. So going along with our history, right, we talked about the U.S. Constitution. Then we worked our way to the 16th Amendment, right? We talked about, okay, during the Civil War, there was an income tax that could have been viewed as unconstitutional, but it expired in 1872, and there was a case in the 1870s after 1872 that they viewed as moot, so they didn't rule on that issue. Then we have 1894, and then we have the Pollock case, and they ruled unconstitutional. Then we have the 1913, we've got the 16th Amendment, my apologies, 16th Amendment, and then now Congress can levy income taxes. So 1913, we now have the income tax. We now have the income tax, and we have the Internal Revenue Code. Well, not necessarily. You're like, okay, 1913, isn't that when the Internal Revenue Code started? No. So between 1916 and 1939, there's many different tax acts out there, different tax bills. So we talked about the legislation earlier, right? Public law, and you can go back in time and see some of these, but there's all these different tax bills. And at first, 1916, 1917, 1918, it's not that difficult to kind of go through the different bills and kind of put things together. But when you start getting into the early 30s, mid 30s, right? You're starting to get into the Franklin Delano Roosevelt. You're starting to get to that time, and there's a lot of different legislation. There's a lot of different tax cases. There's a lot of stuff going on in the tax area. And things start getting really confusing. So in 1939, Congress says, hey, we can't just keep going into these tax bills because tax practitioners, they can't keep it all together. So what we're going to do is we're going to create the Internal Revenue Code, Title 26 of the U.S. Code. It's going to be devoted to Internal Revenue Code to taxation. Okay? So our first Internal Revenue Code is in 1939. Okay, so the 1939 tax code, between 1939 and the late 1940s and early 1950s, lots of different tax cases, lots of different updates to the tax law. But one of the major problems with the 1939 code was the numbering system that was used. Specifically, the 1939 codification numbering system did not leave adequate room for subsequent changes to the law. So in 1954, Congress, and again, there's a lot of changes in the tax law between 1939 and 1954. For example, we get our subchapter K of the income tax provisions dealing with partnership tax. So big changes there. That whole area comes into play. But there's not enough room, so we have to make a new Internal Revenue Code. So this is the second Internal Revenue Code in 1954. And by the way, the Internal Revenue Code at the time of this video, which we're going to talk about in a moment, the 1986 tax code, it uses the same numbering in 1954. So bravo, the same numbering system, it still works. So they thought long and hard, they figured that out. So 1986 is the third Internal Revenue Code. And by the way, at the time of this video, and this could change in the future, so don't quote me, you'll obviously continue on, we are using the 1986 tax code. And you're saying, well, how is that the case? Aren't you're filming this in 1986? No, it's much farther than that. I'll explain. But before we do, 1986, we have the Tax Reform Act of 1986. And there's a huge shift in the tax policy out there in the U.S. government, in the U.S., going from wealth redistribution as one of the major items of the income tax to more of a, okay, we're going to raise revenue. So back before 1986, before this Tax Reform Act of 1986 gets passed, the major goals of the taxing was raise revenue and also wealth redistribution. But then Tax Reform Act of 1986 gets passed. Now the main emphasis is just raising revenue. Wealth redistribution kind of just is kind of pushed to the side. It's not as important. And basically, that requires a new Internal Revenue Code because there's just so many massive changes. It just would be so hard to keep straight with the 1954 code with how many brackets there was in the 1950s and 1960s. There were so many. And in 1986, 1987, there's only 2 brackets. It's 1987, 1980. There's only 2 individual brackets. So you're like, whoa, like that's what I'm talking about. Is that much of a change? Okay. Now when I'm recording this video in the the late around 2020, and again in the future this could be different, but we're still using the 1986 tax code, so we're still in that third Internal Revenue Code. And you might be wondering, well, haven't there been a lot of tax changes since then? Yes. For example, I keep mentioning the Tax Cuts and Jobs Act of 2017 was a major change in the tax law system, but still it fits in line with how the 1986 tax code, how everything fits. Now, it's very possible in the future we have some major tax change where, who knows, maybe something so fundamental like, okay, how we define income is completely changed. Maybe we go to a consumption tax, again, just theorizing, maybe it's possible, or some type of national retail tax, and maybe a new Internal Revenue Code is needed because the old one, it just wouldn't really work. It would just make it so confusing. So we're still in that third Internal Revenue Code. All right, let's go on. Okay, question 12. The Internal Revenue Code is Title 26. All right, we just talked about that of the U.S. Code. How is the Internal Revenue Code subdivided? Okay, so we've got 8 different levels. So at the very top, of course, we have our title, right? Title 26, and that is the Internal Revenue Code. And there's different U.S. codes out there. There's one on bankruptcy. There's so many different ones. There's criminal. There's different U.S. codes out there. So Internal Revenue Code, everything dealing with tax falls under Title 26. Okay, the next level. So each of these levels has a sub. So there's 8 levels, and then the one that's directly below has a sub. So of course, what comes next? Subtitle. Subtitle, and we're going to talk about subtitles and what exactly they are and how we classify them, and we'll talk about that in a moment. Don't worry, I'm not going to take away the thunder of that question. Subtitle comes next. This question is just about understanding the structure. Okay, what's next? So the next is we're going to have chapter. So chapter comes next. Okay? Then of course under that we've got subchapter. Subchapter. All right? And again, we'll talk about chapters and subchapters later on. Next, so number 5. Again, we're going down to number 8. We're going to have part. Part. Number 6, you got it, subpart. Number 7 is the most important element when it comes to tax in the Internal Revenue Code, section. And then number 8, you've got it, is subsection. So that's how we break down the 8 levels. And you need to know that. Make sure you know that. Whether you're taking my class or any tax research class, guarantee you got to know that, right? Title, subtitle, chapter, subchapter, part, subpart, section, subsection. The way I like to learn it is remember that those even numbers are always subs, right? Sub, 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 sub. So it's always whatever's above that, okay? So the odd numbers are what you got to really learn. Of course, we start with title. So just learn that, okay, the top is always title, right? Top title, right? That's how I like to think of it. Top title. Got the T and the T action, right? Top title. Everything below that, and you've got to remember you got to remember them, right? There's chapter, part, and section. Just remember those 3, right? They come alphabetically, right? C, P, S. So that kind of helps you, right? It's alphabetically, right? Because we got C, then we got P, then we got S, goes alphabetically. So again, top, title, TT, then chapter comes before part, comes before section, alphabetically in that direction. And that's kind of some helpful tips to learn that because you definitely need to know that. All right, question 13. How are subtitles of the Internal Revenue Code identified? So subtitles of the code are assigned by a capital letter. By a capital letter, right? A, B, C, D, E, F, and so on, okay? And think about it. Think about the structure. Remember, we start with title, subtitle. So the capital letter will only be used once because there's only one thing above, and that's Title 26. So you're only going to use these once. Now, there are certain subtitles that you definitely need to know, and I'll talk about those in the next question. But the main ones that I always know, A is income, B is the wealth transfer or estate and gift. C deals with employment. F deals with procedure. And then if you're taking another faculty member, there might be other ones you need to know. Okay, so let's go ahead and let's jump into the next question where it actually asks, hey, what is found in each of these different subtitles? And here it is. Question 14, what is found in each of the following subtitles of the Internal Revenue Code? So subtitle B just did this, right? That's going to be estate and gift. Subtitle F. Subtitle F is going to be procedure and administration. Subtitle A is going to be income taxation. And subtitle C is going to be employment taxation. Okay, so subtitle, we've got these different capital letters. Make sure you know these. These are four of the biggest ones. You definitely need to know these. These are like the main ones. But of course, there's others. There's excise taxes and alcohol taxes, and there's so many different ones out there. And you only use that capital letter once for subtitles, but that makes sense because there's only one thing above a title, so that, you're not like breaking it up. Okay, question 15. Each subtitle of the Internal Revenue Code contains several chapters. So now we're going down one level, the chapter. How are chapters identified? What generally is included in a chapter of the code? So chapters are numbers. They're numbers. And we have subtitle A, right? And that's income. B, C, right? So we have subtitle A, income. We have B, which is estate and gift. C, employment. And of course, there's more. Below these, so next level down is chapter. So we're going to start with 1, and that's going to be calculating normal income tax. I believe that is the chapter, okay? And then we're going down to estate tax, and then the numbering, and don't quote me on the number 11. I believe 11 is where estate and gift starts. The numbering, there's only one number when you get to chapters. So it doesn't start over. It doesn't go 1 for income and then 1 for estate. No, that's not how it works. Chapters are numbered, so it'll go 1 through 99 or whatever is, whatever the last number is for chapters. And, again, I'm not familiar with every subtitle out there because especially the later ones. But it doesn't start over. It doesn't start over is the key thing. Now, chapters, the best way to describe chapters is really it's just a subgroup, of course, of the subtitle. So if you have income tax, you're going to have normal tax. You're going to have the corporate tax. My apologies. That's a subchapter. We'll get to that in a moment. You're going to have normal taxes. You're going to have different elements as you go down. Okay. For the estate and gift, you might have the estate tax. You might have the gift tax. Those will be examples of different chapters. Okay, and then you're gonna have subchapters beneath those. Okay, so let's go on to that. So question 16: chapters are subdivided into subchapters. Okay, of course we understand that. How are subchapters identified? What is generally contained in a subchapter? So a subchapter is specifically, it relates to a specific area of law. Now this, I told you in the last one, of course, it gets more specific. Well, yeah, duh, right? You're like, oh, well, of course it gets more specific. It's a breakdown. Okay, so if we're in Title 26, and we're in Subtitle A, dealing with income tax, and then we're in Chapter 1, which is normal income taxes, and then you're going to have Subchapter. And for example, if you're in Subchapter K, which deals with partnership taxation, subchapters are referred to by many practitioners by a specific area. This is where you start getting into like a specific area of tax law that people practice. Like, oh, I practice Subchapter K. I practice Subchapter C. I practice Subchapter F, which is tax exempt works. You start getting to this area where, hey, it's now, it's kind of like you can group it by that, okay? So subchapters are sometimes divided into parts, which may be divided into subparts. We'll talk about that. Capital letters are used to denote subchapters. So you see the K, capital K. So this is where we have A, B, C, D, E, okay? The lettering scheme starts over. So if things aren't confusing enough, right, We've got Title 26. Then we have Subtitle A, which is a capital letter. Of course, there's only A through Z possibilities here in Title 26, but you don't have to restart over. But then this, when you get the chapter, which is numbering, it does not start over. Not start over, right? So if you're in a new subtitle, it just continues, right? And that's what we saw in the last one. It does not start over. But when you get to subchapters, it does start over. It does. So when you go from chapter 1 to chapter 2, you're going to have an A again, another A, right? So if you get to chapter 2, you're going to see an A, B, again. It's not going to go and continue on. And that's because some of these chapters are broken down into so many different subchapters where it gets kind of long. So for example, if you want to go look and my presentation, my lecture video on Constitution, legislative sources, and tax research, you'll see that for chapter 1, there's tons of different subchapters you need to know, and it almost goes all the way to Z. Okay, almost goes all the way to Z. So it does start over. That's very important to understand. So again, chapters does not start over, but subchapters does start over. Okay, and then parts and subparts, by the way, they are going to start over as well. They start over as well, just so you know. Okay. Now, as I mentioned, subchapters, when you start getting down to areas where you can explain to other tax practitioners, hey, I practice subchapter K, I practice subchapter S, I practice subchapter J, I practice subchapter F. There's different terminology, jargon that we use, and it's very common. Okay, so we're still sticking with subchapters. This question is asking, hey, what is found in each of the following subchapters of the Internal Revenue Code's income tax provision, specifically Chapter 1 of Subtitle A? So we are dealing with Title 26, right? Then we're in Subtitle A, which is income tax. Then we're in Chapter 1, which is normal income taxes. And now we're in the subchapters, and we're asking about C, J, K, and S. Well, I just told you about K, but we'll go through all of these and we'll go in order. So C deals with general corporate tax rules. So C is for general corporate tax rules, and I'll explain more when we get to the end. I'll explain why it's general corporate tax rules. J deals with the income taxation. Income tax. Again, we're still at income tax. Income taxation of trusts, estates, beneficiaries, and similar parties. Okay? Income taxation of trusts, estates, beneficiaries, and similar parties, like dependents that relate to them and whatnot. Subchapter K deals with partnership tax. We just talked about that one. So on partners and partnerships. And subchapter S deals with S corporations. So S corporation taxation. Now, I said that subchapter C deals with general corporate tax. So so if you're an S corporation, there's rules that apply to you there and also in subchapter S. But if you're not an S corporation, you go to subchapter C. And that's why we call non-S corporations, which S means small business, right? As you might remember if you've taken other tax classes, we call other corporations C corporations. Why? Because of subchapter C of the Internal Revenue Code, specifically the income taxation of Internal Revenue Code. So that's interesting, right? Like that. All right, question 18. The most important division of the Internal Revenue Code is the section, which I mentioned earlier. How is a section subdivided, right? So we broke down the Title 26. We went title, subtitle, chapter, subchapter, part, subpart, section, subsection. So now we're asking, okay, section, which, by the way, sections, again, most important division of the Internal Revenue Code because we refer to sections so frequently, even more than subchapters, okay? How do we break down the section? So what's next? So next is going to be subsection, okay? And then below that is paragraph. And then we have subparagraph. So after you learn the title, right, to subtitle, and then chapter to subchapter, part to subpart, you get the idea that, hey, we use the sub. So then next is clause to subclause. And then below, if you go any further than that, we just usually start saying big I, little I, all these different things. So a section is going to be a number. It's going to be a number. It might have a letter in it. There are some sections that have letters. For example, you might see section 263 cap A, that's how we call that, or maybe 280 cap F, or 199 cap A. So if the section and a section symbol is this little S. The way I like to draw, if you're ever drawing a section symbol, if you're ever interested, draw 2 S's. Draw one like that, and then draw another one like that. That's the easiest way to make a section symbol. You can also put it in, Microsoft Word or whatever processing you're using a computer. You can get that section symbol. But that's the best way to draw it, is to do an S and an S like that. That's section. Okay. So you'll see some code sections actually they have a letter in them, and that's because, going back to our numbering we talked about earlier, remember Congress has a numbering system, numbering scheme, and they want to keep in mind they want that all to fit together in the same topic, so it all fits in properly. And that's why they do this, so they can fit it in there, so we can get it into a specific chapter without having to reconsolidate or subpart or whatever to keep it in the same topic. So they do these letters. Section 280 is very, very famous for this. If you go look at Section 280 of the Internal Revenue Code, you're going to see 280 Cap A, 280 Cap B, 280 Cap maybe 280 C, maybe not, 280 E, D, E, F. It goes on. Okay, that's a notorious one for having lots of letters. Most of them just have like A, Cap A or Cap B. There's and this is most code sections don't have this, but there are some that do. Okay, and I just gave you some examples. Okay, so that's section. It's a number, and it could have a letter, but usually it's a number. Subsection is going to be a little letter. So A, B, C, like that. Okay, paragraph is going to be a number. So 1, 2, 3, like that. Subparagraph is going to be a big letter. So A, Cap B, like that. And we just say paragraph A, paragraph B. We won't say Cap A. The only time we say Cap A is when we're talking about the section. So 263 Cap A, 280 Cap F, Section 199 Cap A. Okay. Some practitioners, they just say 199A because it just obviously it doesn't take as much to say that, right? Not as many syllables. But the way that we would say this is, okay, Section 199 Cap A, subsection A, paragraph 1, subparagraph B, as an example. So clause is going to be little I, 2 little i's, and that's actually how we say that, little I, 2 little i's. You could just say 2, clause 1, clause 2, but some people say little I, 2 little i's. And by the way, it keeps this. It keeps these things. So a subsection will have the little a, paragraph will have the number, subparagraph will have a capital, clause will have these other items. Another thing about sections is you might have flush language, and I talk about this in my video, but flush language will just all of a sudden you'll have like this language right here, and you'll be like, hey, what the heck is that? We usually cite to whatever is the closest thing. So if you're at a subparagraph with flush language, you cite to that subparagraph and say, 199 Cap A, little a, or subsection A, paragraph 1, subparagraph B, flush language. That's how you would cite to it, because you could have flush language throughout a different code section. Okay, so that is how you break down the subdivision of a section. And make sure you know this as well. You need to know how you break down the title all the way down to subsection. You need to know how to break down section all the way to subclause, right? Section, subsection, paragraph, subparagraph, clause, subclause. You also need to know subsection, paragraph, subparagraph, clause, what these look like, right? Whether it's a small letter, big letter, you need to know that. Very important. Very important. Let's continue on. Okay, question 19. Are there any exceptions to the general formatting rules for code sections? So this question, there are some exceptions to the general formatting. So we just went through the general formatting, and the main ones I mentioned, okay, remember I told you that sections almost always are numbers. You might have some that are a number with a capital letter, like again, some examples are 263 Cap A, it's a big one. 280 F, 199 Cap A. Those are some big examples, but that is one exception to the rule that usually it's a number. Another example of something that you might see out of line. You might see a code section that's like a smaller code section. Usually this happens in smaller code sections, or code sections that don't have as much. There's not a lot of stuff going on. There's not a lot of exceptions and stuff like definitional sections. So remember, we have section. Then we have subsection, right? And again, it follows that the subsection will be the little letter. Then we have paragraph, which will be a number, to subparagraph, okay? So some different code sections, for example, and one you can go look at is section 212. you will see that section 212 does not have any subsections. Section 212 has some language, and then it jumps right to paragraph. So it has paragraph 1, 2, and 3. So you'll find 212, paragraph 1, 212, paragraph 2, and 212, paragraph 3. Okay? And this is because it's just a small provision. There's not really a lot going on. So there's been times where, and you're saying, well, why did they do this? Why didn't they just do subsection A, subsection B, subsection C? And I would agree with you. You got to remember that legislators and their aides and whatnot are writing this, and they're not. The code is written by different people. There's different bills. You have different code sections, so it's not all uniform. And you'd be surprised. You'd be like, okay, well, can't they look at the other sections and keep it the same format? You'd be surprised. Stuff like that happens, unfortunately, in the law, and it makes a pain. But that is another exception of the general rules. But the general rules really are, I would follow those. And again, these are really two examples of exceptions you might see. Okay, question 20, really moving along. Do section numbers repeat themselves, or is each one unique? So this one is like probably the easiest question. They are indeed unique. You will not find two sections. Now remember, we learned earlier that subchapters repeat, right? So you might have many subchapter A's based on what chapter you're in, right? So that is an example of something that repeats. Sections do not repeat. They are like subtitles or chapter numbers. They're like chapter numbers where they do not repeat. Okay, so code section numbers, they do not repeat. So you're only going to have one section 1. You're only going to have one section 199 cap A. It's not going to repeat. And you'll see that the code sections, they go up to a very high number for that reason. And that's, again, one of the reasons with the 1954 tax code having to change up the formatting, and that's very important. So they do not repeat. They do not repeat. They are unique. Question 21. In the citation section 71B2 cap B, and the reason why I read it like that is because I don't want to give away the answer. What does the B stand for? What does the 2 stand for? And the B, what do they all mean to a tax researcher? Because when you're doing tax research, you gotta reference your citations in this format. You gotta follow that so they know where exactly. If you're saying an exception to a general rule, they need to know, hey, where is that coming from? So I can go look that up. Okay. So of course, let's just break it down. Let's just break down this entire thing. Let's diagram this, break it down. So section 71, of course, that's section 71. So what comes next? We have little b, right? Which that is a subsection. So that's the next one below, right? Subsection. And then below that, we've got a 2. And that 2 is going to be paragraph 2. And then we have subparagraph big B, right? And that's how we would reference that. So we would actually, when you're saying something, you're saying section 71, subsection B, paragraph 2, subparagraph B. I know it sounds like a mouthful. It really is. But that's how you would actually say that. And you make sure that you say it that way. And again, you want to make sure that, hey, subsection is going to be a little letter. Paragraph is going to be a number. Subparagraph is going to be a big letter. Because that is how the formatting, that's how it follows. Okay, that's how it follows. All right, I love questions like this. So this question says, correctly cite the italicized sentence. So we're looking for an italicized sentence indicated by the asterisk. So in case you can't see the italicized sentence, I just also put an asterisk in the following passage. So once it's to correctly cite it, do a citation. So we saw the last one. The last question kind of made us kind of explain what the citation was, going down to a level. Now we actually have a code section. So I pulled this out of the code at the time of the video, and this might have changed in the future. So just use this example, assume that this is what it is. It says section 199 cap A, right? So that is the section number, okay? So we're trying to cite down here to this asterisk, to this level. So of course we know we have to start with the section number because all of this is section 199A, so it's all going to be there. So we start there. So it's definitely in our answer. This is our answer, right? We're doing our answer here. We start with the section number. So we are in subsection A because there's no subsection B. So it's going to be, we put a little bit A, that's subsection A. Okay, there is paragraph 1 and paragraph 2. We are in paragraph 2. So we put paragraph 2, and then we are in subparagraph cap A. So again, we're in section 199A because this entire item is section 199A. This all is paragraph A. This is 2, right? Well, let me put over here to make it better. This is, and we're down in here, right? We're down here. This is all 2. And then, of course, we're here in big A. So it's section 199A, subsection A, paragraph 2, subparagraph A. That's how we would say that, and that's how we cite that. All right, question 23. So the tax researcher must be careful not to overlook connecting words which are in the code, such as and, or, at least, more than. So explain why this is important. So first, let's talk about and or, because those are the ones that are very, very important. This is all important, but very important. And versus or. Now this one, at the end of this, I want to talk about tax jargon versus non-tax jargon and why tax jargon, never assume that tax jargon and non-tax jargon are the same, although they could be, but usually they're not, okay? And or, it's easy to understand. Just basically take it from a literal sense. If you've got a code section, for example, if you look at section 71, and section 71, certain alimony is going to be included in gross income. Certain alimony is included in gross income. Depends on the year and other items. So that's what 71A says. 71B defines alimony, and there's different requirements. 1, 2, 3, 4, 5. Okay? And you'll see there's comma, 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 and. Okay? If it says and, that means you have to meet all 5 of these to have alimony. If it said or, you would only need 1. You don't have to have all of these. You could have multiple ones, but you only need to have 1 to get it. But it's not or, so that's not the case. So and versus or is very, very important. So whenever you see and or in language, make sure you note that. And you need to note that to your researcher and say, hey, this is and. And sometimes people even put emphasis on that, okay? There's other phrases, but some of the other common ones are at least or more than. Whenever you have phrases like at least, more than, less than, more than 50%, less than 50%, not less than 50%. These all have different meanings, as you know, quantitatively. So you always need to note that as well. The other thing I want to mention is tax jargon, okay? Tax jargon, any kind of item, right? You're like, okay, in the tax law, we always see the phrase, we see it constantly, income. The first time you see income, don't assume that income means the same as business or accounting, okay? Do not assume that it equals business or accounting income. In some cases it might, and they might be equal, but not all cases it will, because tax income is defined under the tax law. It's been defined that way specifically to apply a tax law, okay? Now, it's very rare, but it does happen sometimes where the courts will say, hey, well, this item is just gonna be interpreted like a common layperson would, okay? But almost always, tax jargon is specific to the tax area. So make sure you keep that in mind. That's very, very important to make sure that you note. All right, let's continue on. Question 24. One important problem that faces a tax researcher is the interpretation of the Internal Revenue Code. Comment on each of the following interpretation problems. So we're going to go through all of these A through E. Now, I will say we just talked about B and versus or, so we don't have to do that. We already did that one. And then also in E, it says words that modify percentages, dollar amounts, or time. We just talked about more than 50%, less than 50%. We just talked about the importance there. So go back to that question and reference that. Let's start with A, exceptions to a code section. So code sections, and I have videos that go over top 100 code sections that also kind of give the breakdown of code sections. But code sections, and I can't give you the breakdown of subsection and paragraph, subparagraph, and clause and subclause for this, but usually in a section, you'll start off with a general rule. Not always, you might have something else, but usually you'll start off with a general rule. And then you'll find an exception underneath the general rule, and then you'll find an exception to the exception, which gets you back in the general rule, okay? Or gets you out of the exception. And that's kind of the framework of most code sections. Now, you might find an exception to a general rule in a code section in another code section. So you have to keep that in mind, okay? There's exclusions to gross income. So gross income is included in gross income is defined in code section 61, And income is gross income is the general rule. Okay, so income is in gross income from whatever source derived. There's different exceptions to gross income you find in section 101, 102, 103, 10, and so on. In that, continuing on with in the early 100s. 101 dealing with life insurance proceeds in certain events. 102 dealing with gifts. 103 dealing with municipal bond interest. 104 for damages, certain damages. You continue on. Okay, they're excluded from gross income. So that's an exception to what is gross income. But most code sections, what you have is you have exceptions. Like, for example, in code section 71, we start off with the general rule, and the general rule says alimony is included in gross income. So then it defines what alimony is in 70, below that. And then as you go below, it says, okay, but an exception is child support is not included, is not considered alimony. So that'd be an exception to what is not included in gross income or what is not alimony. So that's kind of a general idea of exceptions and then exceptions to exceptions. Okay, so we've answered that. We talked about B, and versus or, and how important that is. Last question. C, recent changes in the code. So when analyzing a provision that recently has been changed by Congress, a researcher must be very careful to cross-reference all the uses of terms whose definitions have been affected by the new law. Because within that new law, they probably have provided guidance on what exactly that means. So again, Tax Cuts and Jobs Act of 2017, for example, Section 199A, we never saw anything like that provision. So within Section 199A, qualified business income, QBI, it defined qualified business income. So we have these new phrases and new terms, and basically they're new changes, and we have to look there and look at this legislation to see what it is. D, effective dates. So effective dates, the researcher must be aware of the effective dates of various changes in the code. So a provision may not go into effect immediately upon its adoption by Congress. For example, Tax Cuts and Jobs Act of 2017 was enacted at the end of 2017, very end of 2017 in December. Well, some of the provisions in that enactment, the enactment date was not the crucial date, again, December of 2017, because some of the provisions, they actually started in September of 2017, and others took effect in the beginning of 2018, and others took effect in 2019, 2020, and then some of them, would expire at the end of 2025. So there's so many different, elements and dates out there. You got to keep those all intact and in line. And then we talked about E already. Dealing with, different percentages, dollar amounts. Of course, the phrasing is very, very important. And that brings us to our final question, question 25, which is a great question to end this discussion with. Comment on the statement. All tax questions can be answered using the Internal Revenue Code. This is a false statement. Now, if I was to say all tax questions can be started using the Internal Revenue Code, I would agree there. You should always start with the Internal Revenue Code. Now, some other people might disagree with me because they might have something else they always use, but most tax practitioners, almost all tax practitioners will tell you the tax code is the most important of all the different tax authorities. Always start there. Always start there. Okay? But let's go back to this quotation. All tax questions can be answered using the Internal Revenue Code. Again, you got to use the Internal Revenue Code when you're doing tax research, but not all questions can be answered. You also have to look at things like administrative sources, administrative and executive branch from the IRS and Treasury, like regulations. Regulations are meant to help clarify the code because the way the code's written, you're going to see a lot of times it's very broad. We're not going to have every little detail in there. For example, the definition of gross income. Congress left it very broad. They used the language from the 16th Amendment. They kept it broad for a reason because back in 1913, when we have the 13th Amendment and the from whatever source derived language, they didn't know anything about mining bitcoins or cryptocurrency, which would result in gross income. They didn't know about that. They had no idea that was even possible. So that's the idea. So we have these regulations and administrative items like revenue rulings, rev procs, and I have videos that go over administrative guidance, and I recommend you watch that, that give you an idea of also other types of authority. In the judicial setting, we've got case law, and I have a video on judicial items in case law, right? That's very important as well, and what's considered binding and not binding. So you don't just look at legislative, you also consider the other branches, the administrative or executive and judicial branches. So look at the three branches. So you consider all these different types of tax authorities. And that is probably the perfect question to end on because remember, legislative and constitutional sources are very, very important, right? The Constitution is the highest law in the land. the Internal Revenue Code is by far the most important of all the different tax authorities out there. Also, tax treaties are very important as well. And then we have the congressional intent items like the committee reports and the floor reports and the Joint Committee on Taxation. All these legislative items are very, very important, but it's not a vacuum. Tax research must be conducted with the administrative and judicial as well. So make sure you watch those other videos to make sure that you're going to do a phenomenal job in tax research.